there's a bit of an arbitrariness to certain products that today are and are not considered gambling in terms of the actual risk profile that customers face. And it's just sort of the way the chips have fallen over, the last 100 years or so of commerce. I would argue that placing a futures bet on a baseball team over under number of wins over the course of a season, a single bet that takes 6 months to elapse, in a lot of ways, that is less gambling-like than going on Robinhood and buying out-of-the-money, zero-day to expiration call options ahead of NVIDIA earnings. And one of those is not considered gambling, and one of those is today.
This podcast is sponsored by Pragmatic Solutions, the player account management platform chosen by today's smart betting and gaming operators. Don't let technical constraints delay you from achieving your business goals. Expand your business, boost your margins, and dominate the market in any leading regulated jurisdiction with our powerful, flexible, and secure iGaming platform. Enjoy its extensive marketing tools, compliance protection, real-time data, and a wide portfolio of over 1,000 industry providers. It's time to upgrade your technology. Let Pragmatic Solutions show you the modern approach. Visit pragmatic.solutions and join the smart thinkers.
This podcast is brought to you by Pragmatic Play, a leading game developer providing player favorites to the most successful brands across the industry. With an award-winning multi-product portfolio of slots, live casino, bingo, virtual sports, and more, Pragmatic Play is powering up new possibilities of play through one single API. Visit pragmaticplay.com and discover your favorite every time.
Bingo, bango, bongo. We are back here on the Vested Interest podcast. Lloyd, Benjie, great to have you guys here. Lloyd, where are you at the moment?
I am in lovely New York City at the moment. Let's go Yankees.
Right. Oh, I like it. What about you, Benjie? What's up?
I'm in Montreal, Canada at the moment, Pierre, and it's just amazing how quickly the summer months have passed us by or are passing us by.
Brilliant. Yes, I went to Sweden myself just the other day, and being based here in Malta, August is supposed to be the month which is like the sweltering heat and so on. And you forget very quickly that is not the case in the rest of the world. And I came to Sweden with seeing my fellow countrymen in winter jackets over there in the middle of August. So that was a reminder of why perhaps I am currently based in Malta. But that is not the topic of today. We have a really interesting discussion today as the prediction markets space is really heating up at the moment. The legacy real money gaming operators are now entering the ring. And so we were thinking to dedicate the episode today to this really dynamic space. And so we are diving into this fascinating topic that kind of sits right at the intersection of finance, gambling, and information economics. This platform turn opinions into tradable assets, whether it is the outcome of an election where perhaps the prediction markets first became popular, right, through poly markets, through the US election a number of years ago. But now to the launch of a product or even the performance of a company. And of course, now that the prediction markets are pivoting into sports gambling as well. Supporters argue they are one of the most accurate ways to forecast the future, whereas critics worry about regulation, manipulation perhaps, and the ethical gray zones that they create. So we're going to unpack today how the prediction markets actually work, why investors like Lloyd and Benjie are paying attention to this space currently, and what role they might play in reshaping not just betting, but decision-making in general. So let's get into it. Benjie, just to go back to the basics here as a starting point of the conversation today, could you perhaps summarize the space and how we got to where we are today in the kind of modern version of prediction market sports betting?
Yeah, look, I mean, you kind of unpacked a little bit in your prelude, but without getting into too much detail of the specifics of it, you look at companies like Kalshi and Polymarket, who are, I guess, approaching it from different perspectives. But, you have the ability via the CFTC to have the buying and selling of contracts. And if you take that by extension to, historically these things have been used for different types of asset classes, but now you bring in the world of the prediction markets and the world of the elections, and being able to use it for political events, as we've seen with Kalshi, etc. And then you add in and layer in the ability to buy and sell sports contracts, initially being, which team will or won't win the World Series, which team will or won't make the playoffs, et cetera, and then move that all the way down to predictions on individual sports events and potentially subsets within individual sports events, and you begin to get a product that really begins to mirror sports betting in a pretty significant way. So at a high level, that's kind of the evolution that we've seen come in quite rapidly over the last kind of 12 to 24 months, to the point now that, as to your point, Pierre, we have a number of the regulated sports books that are taking a very close look at this space and or making announcements as it pertains to potentially entering the space. And at a high level, that's where I would go with it.
Yeah, and I mean, I think when we step back, we look at the fact that there's a bit of an arbitrariness to certain products that today are and are not considered gambling in terms of the actual risk profile that customers face. And it's just sort of the way the chips have fallen over, the last 100 years or so of commerce. I would argue that placing a futures bet on a baseball team over under number of wins over the course of a season, a single bet that takes 6 months to elapse, in a lot of ways, that is less gambling-like than going on Robinhood and buying out of the money 0 day to expiration call options ahead of NVIDIA earnings. And one of those is not considered gambling, and one of those is today. And really the case is that probabilities are all around us. When you decide to take an umbrella or not, you're assigning some implied probability to the likelihood of it raining and how much that will inconvenience you and what the odds are that you'll be annoyed if you carry your umbrella and it doesn't rain. And when you leave early for the airport, again, you're kind of pricing in the probability of hitting traffic and how inconvenient it will be for you if you are late, or how little you want to be stressed on the way. And these prediction markets are just formalizations of, I think, the way life works, the way we navigate the world. And so it makes sense to me that there are, in part enabled by new regulations and in part by new technologies, these new modalities that just allow people to formalize the type of speculation that we all do all the time. And I think it suggests the fact that is kind of just a characteristic of the universe or of society, that we're probably moving toward a world where more and more things are able to be formally speculated upon with some sort of financial outcome tied to the success or lack thereof in that speculation. And right now we have this very interesting window where there's a collaboration, or in some cases competition, between the FanDuels and DraftKings of the world and the Kalshis and Robinhoods and CME groups. And I'm sure we'll talk over the course of this episode over how we actually think all of that will unfold. But I think almost certainly the 5 to 10 year from now answer is, whoever may or may not be market leaders, there will be far more things that retail investors and institutional traders can speculate on in terms of wagering money on uncertain outcomes in a proper regulated fashion, commercialized enterprise than there are today. And it's quite fascinating to understand whether it's the folks who have the distribution, like FanDuel and DraftKings today, that have the customers, or maybe the folks who really have the infrastructure, the exchanges and the market making firms that will win out. And my guess, it's probably some sort of combination of those parties.
Absolutely. It'd be interesting to dive into that deeper. But I think it was Todd Haushalter who said all the way back in 2019 that the biggest competitor to the likes of Evolution and other gambling companies today is perhaps Robinhood, right? So to your point there, Lloyd, that there is a lot of gray space, let's say, on what constitutes gambling and what doesn't constitute gambling. Sweepstakes, another example, of course. Loot boxes is another one. But Benjie, I want to jump back to you again here now. So just a few days ago, FanDuel announced a partnership with CME to now embark on their own prediction markets product here. There's rumors as well that DraftKings is eyeing a similar partnership. BetMGM, similar as well. Why are the real money gaming companies in the US, the traditional regulated sportsbooks, looking into launching their own prediction markets service? Why is this interesting to them?
Well, if we're talking about the regulated operators specifically, I think it's a really interesting dynamic, because if you look at when these companies came into the regulated gaming space in the US, the regulated iGaming space with regulated sports books in the states in which they were allowed, and in some instances regulated casinos in far less states, but again, the states in which they were allowed, anything that deviated from that, they were lobbying against. And that would start with fantasy and picks, and certainly within sweeps. And we've seen these various kind of bigger operators and mid-size operators kind of getting together and parlaying their lobbying efforts, viewing those entities as something that is either a threat or something that they don't want in the market. Whereas this has been a little bit different, because I think when you look at the prediction markets and the ability to get CFTC approval, I think it brings in the dynamic whereby these sports books could bring their operational aptitude, know-how, technology, and client bases, not just within the states in which they're active today, but within many of the states in which they're not active today. So that brings kind of a national opportunity and a national, somewhat regulated opportunity potentially, without going too much into the legalities, depending on which way the cookie crumbles. So as it pertains to the DraftKings and the FanDuels and some of the other real money gaming operators, the approach that they've taken here to either consider entering the prediction markets fray and or not lobbying against it, and or we're now seeing some announcements of baby steps initially of their V1 of potentially entering the space. It is quite telling as to how they view the world of prediction markets versus how they view some of the other worlds that they were less likely to get involved in initially.
Yeah, I assume at some point there was some internal meeting where someone at DraftKings and FanDuel found out what Kalshi and Robinhood and Polymarket were up to, and at first had a knee-jerk reaction of being really angry. And they said, we've spent all this money on gambling license fees and gross gaming revenue taxes for the last 7 years, and now someone's just going to completely, effectively circumvent that. And then someone else in the room said, wait, hold on. It might be a if you can't beat them, join them situation. And we as DraftKings and FanDuel might be far better off 10 years from now in a world where, yeah, maybe we paid a lot of these fees and taxes going backwards, but maybe this actually changes the dynamic and the leverage that different parties have going forward. And so it's not surprising to me at all to see now that not only did the market leaders seem to not be lobbying against, but actually lining themselves to be for. I think one of the disadvantages that DraftKings and FanDuel have been at compared to Kalshi is that Kalshi doesn't really care what any gaming regulators think at all, anywhere. They have no gaming licenses and no gaming license processes to be concerned about. And that allows them a lot more agility. Whereas DraftKings and FanDuel probably have far more political and licensing related considerations when they're thinking about how to proceed. And I think if you look at the FanDuel CME announcement, it's quite strategic and set up to be inoffensive, at least for now. They're not doing anything with sports. Everything happens on the CME group's existing rails. I think they're mostly focusing on gold and oil future related contracts as a testing ground. It doesn't take much imagination to contemplate what one or two steps of further iteration from this current partnership would look like. But I think you can see it was quite cleverly designed to not piss off any regulators too much, but also signal to the market, hey, we're not letting Kalshi and Robinhood take this whole market, and also give a little bit, perhaps, of a lighting of a fire under whether it's tribal groups or regulatory groups who previously thought they had more leverage and could say to FanDuel, you're not going to access this customer base unless you make XYZ concessions. And now FanDuel's kind of telling the market, oh yeah, watch me go this other route that will effectively, allow us to tap into a certain market. And my sense is that probably progresses certain regulatory and otherwise negotiations. So fascinating time, and I think quite astute movement so far by FanDuel, and I imagine DraftKings soon to follow.
And Lloyd, I would kind of add to that that the implications here are very far-reaching in terms of who's taking a close look at this now and assessing how it might impact them. I think if you're a regulator in an individual state, you're Illinois, and you're implementing all of these new taxes, and at some point you got to take a step back and consider, to your point, what FanDuel is doing right now is reasonably non-controversial, but doesn't take that much imagination, as you allude to extrapolate what steps 2, 3, 4, and 5 look like. And if you forecast 1 year, 2 years, 3 years down the line, you begin to wonder what the future would look like for states that aren't going to be a bit more reasonable in their approach when they've got a whole bunch of competitors in town and what's likely going to become a fairly crowded space on the prediction market side.
Yeah, that's such a great observation, Benji. I mean, it is like tug and pull constantly between the regulators regulating the regulated operators and that other space that is available to the players, which is unregulated and untaxable. And that is the case right in the prediction market space. So you would imagine a FanDuel in New York, for example, isn't exactly excited to pay that 50+% state tax, and there's a cross-sell opportunity perhaps in the future over to the prediction markets where they don't have to pay that tax perhaps. So something to consider definitely for regulators when they think about taxes in the future, for sure. It's also interesting to think about how the markets reacted to kind of the evolvement of the prediction market operators. We look at DraftKings, for example, who had a pretty big dip once Kalshi became more established and Crypto.com entered the space and so on and so forth. But now the share price has definitely recovered, and it seems like the markets are welcoming more the entrance of the prediction markets, even within the regulated money gaming space as well. But a question to you, Lloyd, perhaps. Considering now that we have more and more operators, both within the real money gaming space, the traditional operators, and the kind of entrants that traditionally, would you say, have not been involved in real money gaming directly, but similar products, of course, that are touching the space. Do you see that the space perhaps is becoming overcrowded already at this early stage? And who is best positioned to succeed at this point, in your opinion?
Yeah, I don't know if we're overcrowded just yet. Even the market-leading products are not so great, to be honest. I think, FanDuel and DraftKings fixed odds sportsbook is probably a more seamless user interface for placing a wide variety of bets than I think any of the prediction markets have received so far. They're getting there. They look nice and slick. They generally have much more limited betting menus than a larger sportsbook does. And so I think the product has a while to go. I also think there's not that many companies with offerings that are live. There's been decentralized prediction markets, dozens or hundreds of them that have been available all along. And it's not as if over the last few months there are so many new regulated CFTC licensed prediction markets that consumers have access to. Certainly there will be. And if the pitch decks we receive and the pivots that people are engaging in, or the product features, certainly there will be. It seems like the folks best equipped to succeed are those that either have world-class distribution or world-class infrastructure. Distribution meaning customers who like to engage with these types of products. Infrastructure refers to a few things. Do you have not only customers, but the wallet infrastructure? It's not so easy to just take someone's FanDuel wallet and move money from that wallet into a CFTC licensed prediction or futures contract, depending on how you're setting that up. Also, do you actually have the ability to operate an exchange and match orders? Even if you're not doing peer-to-peer, you're doing peer-to-market maker, it is much more operationally complex to run effectively a limit order book than it is to run a fixed odds machine where there's only one counterparty. And then finally, do you have the liquidity, the market makers and the API so that those market makers can trade programmatically? So likely, some combination of the established gaming operators, DraftKings and FanDuel, the established exchange companies, CME Group, Kalshi, some of the crypto folks, Polymarket, Crypto.com, Coinbase, and then maybe some of the startups in the US that have built in-house infrastructure and have some licensing under their belt. Profit, Sport Trade, and Novig are the three that come to mind first, but certainly there's a few other exchanges out there that do have a lot of this infrastructure and some of the relationships with market makers. And so certainly those folks are the current targets for whether it's M&A or FanDuel CME like conversations. I think those will be some of the names that you see in the mix more often going forward.
I would add to that, that's a lot of names, right? So if you forecast out a year or two from now, if and when all of those names plus a whole bunch of startups with the decks that you're alluding to, even if not all, but a good chunk of them get into the space, that's a lot of names and a lot of competition, all fighting for the same liquidity, all working with various market makers that in many instances overlap. So what is currently a fairly novice space with fairly novice technology and still a lot of learning curves and lumps along the way, is very potentially destined to become an overcrowded space in as little as 12 to 18 months from now. And, you mentioned some of these U.S. exchanges that went the regulated routes and got licensing in the individual states. You mentioned Profit, you mentioned Sport Trade, you mentioned Novig. Under the initial model that those companies approached, which was individual state-by-state legislation to operate exchanges, it became relatively clear between the 2018 and today that model was dead in the water for them. It just wasn't going to work, right? And as a result, we saw some or most of those companies pivoting towards the sweeps model, and that seemed to give them a reasonable lifeline. And now the holy grail for them is if they can convert and go from what was once dead in the water, going after individual states, to via the sweeps route and then eventually into the CFTC approved prediction market route. I think that becomes potentially compelling for those guys. And, we'll get into the whole investment side later, but a way for them to achieve some sort of an ROI that didn't seem possible, maybe 2 short years ago. But yeah, the short answer, Pierre, is I think it's going to, over the next 12 to 18 months, very potentially become a crowded space. And it'll be interesting to see who are the ones that, via strategic M&A, I think is part of the answer, Lloyd. If you bring one piece of that ecosystem, technology, trading know-how, wallet, and you combine that with someone who has the distribution and or the CFTC licensure, and you start bringing those pieces together, it'll be interesting to see over the next year to 18 months how that jigsaw puzzle comes about.
Yeah, and just a comment to say, what a great example. Don't want to say this prematurely ahead of any real material success, but Profit, Sport Trade, Novig, great examples of how in the world of startups, sometimes it's just about staying alive long enough,
100%,
with good reputation and good integrity, so that when the right opportunity comes along, you are positioned technologically and relationship-wise to jump on it. Again, I don't want to be premature here, but it seems like we are lining up just one of the most quintessential examples of that. Profit, for example, some people don't even know, they actually started in the UK as a secondary market for sports betting slips, kind of like what PropSwap and WagerWire ended up doing in the US. They then left to launch the first exchange in New Jersey. They were the first regulated exchange to launch. To Benjie's point, it quickly became clear that going state by state, not feasible. Then they had their sweepstakes phase, and now it seems are one of the best positioned in terms of their market making infrastructure and hopefully upcoming licensure. So fingers crossed that it's a success story for all of those guys. Jacob at Novig and Alex at Sport Trader are also fantastic and entirely deserving of all that elbow grease that helped them stay alive.
I 100% want to double down on that before passing it back to you, Pierre. Like that is an example, if you're an entrepreneur, of when you're in the ring against Mike Tyson, if you can just stay in the ring and throw the odd jab and pivot and move in the right direction and wait your opportunity and figure it out. That's what these guys had no choice but to do. And I would love nothing more than to see all these guys achieve massive success.
Yeah, brilliant. And I mean, it is a potential massive opportunity there, right? With that opens up more or less the entire United States, potentially barring some local state regulators that are putting legal challenges here now, right? But it also opens the door for potential problems as well, let's say. I mean, you don't have the same the regulation around problematic gambling and these things as well. So it kind of opens the floodgates to some to some extent to offer this product to let's say full force to the market. So there's also that perspective to consider. I suppose
one thing just to add to that, I know we're short on time here. It is true, but there currently are no responsible gambling protections around buying 0 day to expiration out of the money call options on Nvidia that have even lower EV.
Very similar.
And any bet you'd find in the casino.
And people ruin lives on that front as well,
just
right?
One other quick asterisk I would throw. It is certainly the case that the space is quickly becoming overcrowded, but I do not think it should be misconceived as a finite pie that has not grown, that a larger number of companies are going after. In theory now, people on FanDuel might soon be able to bet on, will the price of gold or oil be higher or lower next week than it was today? And so I do think there is a bit of a TAM expansion occurring here, maybe a significant one. And not to mention that in theory, this should invite a lot of sharp price sensitive players, perhaps back from the offshore onto the onshore. Right now, I think a highly liquid prediction market is much better equipped than a fixed odds sports book to take high volume, sharp, price sensitive action. And so I do think it is important to note it's probably not a fixed piece of the pie that more people are going after. There is a significant TAM expansion that all this cross pollination will result in.
And that's fair, Lloyd. I'm past the point of ever predicting again that the gray offshore markets are going to go to bed and are done. I think there's
a prediction market bet on that, by the way.
As there should be. The reality is there's room for all of it, right? There's room for the legislated sports betting alongside the sweeps, alongside the picks, alongside the gray market, alongside the prediction markets, alongside whatever else is going to come next. There's a gargantuan appetite for engagement and sports engagement and some form of real money gaming revolving around sports engagement. And, we're believe it or not, still in the relatively early days of that and investigating what all that means.
I want to talk a little bit about product pivots, as you mentioned and alluded to before, Lloyd. Just to draw a comparison, let's say in the sweepstakes space that at some point figured out that there is a way to offer gambling-like products on the online casino side of things. Then the product pivot within sweepstakes became that you could organize sweepstakes for sports betting, similar activities as well. And so if we think about prediction markets that started off with this kind of sports bet-like type bets, do you think in the future that we'll see a product pivot into casino-type prediction bets, for example? Or do you see any other potential product pivots that we'll see from the first generation of prediction markets sports betting?
I'm not sure that I really see the analogy here. Sweepstakes is kind of like a letter of the law loophole that companies have successfully exploited. Prediction markets is an argument that the CFTC has final jurisdiction on any type of contracts that allow public good through commercial hedging utilities or genuine price discovery, and that many parts of the sports betting ecosystem, serve those purposes. I suppose you might see things that are maybe more like micro betting or same game parlays, certainly on exchanges. But I'd have to think or maybe better understand what else beyond that it would mean to be leveraging the prediction market carve out, if you will, for a casino style product. I think actually that's almost a little bit antithetical. The whole point is that everything the CFTC oversees is not merely random. It can be quantified. There are probabilities and prices that can be discovered. So I'd be surprised if there is a casino product layered on top, but maybe I'm just not creative or imaginative enough to understand what you're thinking of.
Benjie, have you heard any product pivots out there? I mean, you must see a lot of pitch decks landing on your desk with people perhaps trying to do more creative things on this space and trying to be unique and trying to come up with USPs and so on. Is there anything anything interesting that comes through your desk?
I hate to say nothing that I would want to mention on this podcast right now, but that would be my answer. Like, I think we're still in the early stages, and I think to try and come out with a reinvention of the wheel of a segment within the real money gaming space that is in such infancy is almost a bit premature. It's almost the cart before the horse. So I think that, as we start getting some of these companies, live, and as these companies achieve licensure, and as we start seeing more and more of the wheel turning within this segment of the industry, assuming that does come to fruition, then I think you'll see more and more of the potential creativity come into light.
My guess is that Kalshi and Robinhood and FanDuel and CME and Profit and Novig and Sporttrade do not want to see a headline that says, come play at the world's first ever prediction market casino slot machine. I do not think they would invite that type of narrative into the very pristine institutional investment grade story they've been weaving. But I suppose it doesn't mean that no one will try.
That's certainly true. I mean, it's quite interesting still, right? The space is in such early days that it's up to people's imagination to see where the space can go, right? And for an investor and like a VC like you, Lloyd, and an investor like you, Benjie, this is the most exciting type of opportunities, right? When we're in such early days to try to figure out this space and to be a potential early mover. And so, Benjie, perhaps passing the ball over to you here, I'm curious to know, what is the investment space looking like at the moment? Do you get, is this something that is keeping you up at night? Are you thinking about potential investment opportunities in this space? What comes across your desk in general, perhaps then?
So first of all, nothing's keeping me up at night. I'm trying to keep things even keeled to the best of my abilities. But, look, there's no shortage of companies right now, including some of the ones that have been mentioned today and others that have sent decks around that haven't been mentioned today, that are raising capital to go out and do things in the space. And, we've had some level of precedence being set by some of the incumbents, Kalshi and Polymarket, that have raised money at significant valuations, right? Now, obviously, some of the up-and-comers would raise capital at lower valuations than that. But for me, it's always a question of value, right? And it requires for me a little bit of switching the hat a little bit, because a lot of my success on the investment side has been on the B2B side, where there's TAM limitations and where I know what role I can play in helping them get to where they want to go. But it requires a level of being very realistic as to what can be achieved from a TAM perspective. Whereas in this instance, I think most of the incumbents or most of the newcomers that are entering the fray view this as the sky is the limit type of opportunity. And that may prove to be the case, but the sky won't be the limit for everyone. So I think the biggest challenge that I have as an investor who's has looked and or is looking at some of these opportunities, it comes down to the give and take between where are these companies today, where will they be positioned in the ecosystem, how well are they going to be able to execute, and does that valuation, I think, make sense, is a very critical component for me as I look at these things.
Yeah, to pretty much agree with that, and maybe just to offer another angle, I don't know if there is such a great opportunity for pre-seed and seed investors in a, quote, new category here today. I suppose having a formal regulatory and just English language framework to talk about this is kind of new. Talking about the CFTC, using the phrase prediction markets, using the phrase regulated sports future contracts. Sure, some of that is new, but Sequoia backed Kalshi like 7 years ago at this point, and they've been on a mission to do this ever since then. The folks that are best positioned, either by sheer happenstance and luck or by deliberate execution or combination thereof, most of them raised their seed rounds quite a long time ago. To me, this feels like it would be a classic example. And by the way, this is for pre-seed seed investing. If you're a growth investor or later stage, I mean, that's a different story entirely. But to me, this is a classic example of how at the seed stage, by the time there are a bunch of buzzwords, by the time there are conferences with tracks dedicated exclusively to a category, it almost certainly is too late to back, a new, fresh de novo seed player at a, seed style valuation that's going to have a meaningful chance of competing. I think that is the exception, not the rule. So I think there's a number of companies that folks in our industry maybe invested in a number of years ago at very favorable terms that will end up having nice outcomes here. There's probably some great opportunities for later stage investors that like pre-IPO rounds or that have market making arms who can pair an equity investment with a market making arrangement for whom this is the hottest category to look at. But I don't really know. And, you know, I'm always open to being corrected by any new pitch decks that hit my inbox, but I don't really know if this is the right time and place and category to find a, you know, $10-20 million pre-launch company to back and think that they will be able to viably compete with FanDuel, DraftKings, CME, Robinhood, Kalshi, Novig, Profit, Sport Trade, and so on.
Brilliant. That is all we have time for today, boys. It's been another great episode, and maybe we have to make a partnership with one of these prediction and market platforms. What do you guys say? Like, we can publish some odds? I don't know. Like, what about Benjie streaming from the Edition Hotel in the next 10 episodes? It's about 80% likelihood, something like that. Or what about Lloyd wearing a baseball hat?
A lot of the industry predictions we've made on this podcast have come true. So, you know, I think anyone who's betting behind us will do quite well.
I completely agree with that. Lloyd, Benjie, it's been another great episode. All the best to you guys, and I will see you soon in Lisbon.
Thanks, guys.
Thanks, guys.